everybody. This is Mortgage Ballers. My name is Rich Hanlin, and today I have Mr. Shane Valente. And he goes by a couple different places. We got Santa Cruz, we got Monterey, we got up and down the coast. And if you don't understand what I'm saying, we're talking high-end loans, high-end real estate, very, very competitive market. And we got a little guitar in the background. He might go rock for us a little bit, but you know what? Today we captured a little bit of his time. He has an incredible background. Been doing lending for a lot of years. And Shane, thanks for coming on the show today. I appreciate it.
Appreciate it, Rich. Thank you.
You know, we were just talking before this, but we were both talking and we started to go down this avenue. I said, hey, I got to record this. Because people think I'm crazy. Like, Rich, what's up with this Mortgage Ballers thing? What in the world are you doing? I thought you're Xpert. And I'm like, well, you know what? Here's the reality of what I'm doing. Number one, I talk to people all day long. And I thought, okay, I'm going to start talking to people to see if I can help other loan originators, specifically expert home lending. Why not? Why wouldn't I do it? But I call it leverage. I just read this book by this guy named Dan Martell, and he pretty much backed up what my thoughts were because I had heard it from somebody else. But he's talking about if you can just capture some of your energy into something like what we're doing, record it, and it never sleeps. It goes on forever and ever and ever. Somebody might see it eventually, and I've leveraged my time one time for this interaction. You've leveraged your time, and then we can use this incredible thing called social media to work together with some other videos, and the two of them start to work, then three of them start to work, and these backlinks, search engine optimization, all these crazy things start to happen in today's world. And we can do those ourselves without necessarily paying people. That's one of the specialties that I do, that I've done for my own, how to get business and stuff. I'm like, cool. I'd go hire people to show me something. And I'd go, you know, I could do that. I mean, I could do that. I could do that. And eventually I learned how to do stuff. And there's things I'm like, oh, I'm gonna let somebody else do that, but I could do that. But we see the big microphone right there. And not everybody wants to do this. Do I want to shake hands? Do I want to meet my customers in person? And I do, but now I'm forced with 44 states to do it the way we're doing it right now, to get with them electronically. I talk to them on the phone. I'm like, hey, let me send you a link. Let's talk. 'Cause I want them to see me. And I had a jacket on a second ago. I was looking a little bit official because it was kind of cold this morning. But ultimately, when I work with customers, you know, it makes it more real to them when they actually are talking, touching the best I can. So my word has to become my handshake. My voice has to become my handshake. And, you know, when they can see it in my eyes when I'm trying to help them, and we can laugh a little bit and we can pick up on stuff. But I know this isn't the most comfortable thing for everybody, but yet there is a huge separation, Shane, of what people are doing now and what people aren't doing. You were talking about what you're comfortable with, stuff like that. First of all, thanks for coming on. Talk to me about that thought process, because you've been doing it 25 years plus.
Yeah, that's pretty much all I know post-college. So you gotta, you've seen some ups and downs for sure. I just sometimes my whole business was always built on networking meetings, going into real estate offices, sitting down at somebody's desk, getting to know them, small talk, taking them out to drinks and dinner and happy hours and sponsorships. I mean, it's hard enough, and I don't know if anybody's it's very hard to get real estate agents and clients to commit to just about anything nowadays. I mean, let alone that industry, just anybody. And so, yeah, I had to get completely comfortable with the uncomfortable, which is, this guy, it's, using new, more clever CRMs and video systems and mass blasts to get content out to not everybody. I'm not a big social media guy. I have a very big database, and I specifically blast them to the message to specific parties. Because, it's just that's more comfortable to me, because I can be all business. It doesn't have to be me in some, nice restaurant taking a bite of steak and then talking about lending. Like, that's not who I am. So I'm doing typically something regarding like market updates, which I know is very difficult to explain, especially nowadays where you have markets jumping up and down and left and right all the time. I do updates. I try to keep them short and clean and clear. And sometimes I have to go through it a couple of times. And I hate rewatching my own stuff, probably like everybody does. And then I also go into product. I do a lot of, cool kick butt products. That's something I save the deal. Like, and I'll even bring in sometimes my previous client to do this with me, and they give us a massive testimony. And it's like, and then that goes out to all my clients and some agents and whoever I really want to specify that message to. Maybe not my top 10 or 20 because they already know that we're good at what we do, but those that you've been trying to get business from forever, they want those testimonies. They want to know that cool product where B of A fumbled the ball, Wells didn't call back, they couldn't close on time, they didn't have the product, a loss of EMD, something tragic. And not that I'm trying to always toot my own horn, but I'm just trying to explain you really have to build the team. You build the team around the originator. As soon as the team is broken, the realtor no longer has any pull with what's going to happen in that transaction. So I try to deliver that message to not only the client, but the agent, always thanking the agent, of course, to the client. But it's really helping get the delivery and the trust back in. Nowadays, everybody wants AI to do the job for this and that and the other, but I'm telling you, AI it may be able to make this false person that I am and deliver a clear and concise message, but it's not going to be me following up on that phone call, to that person and talking about their family and what have you and getting personal on it. So it's not going to take this interaction away. So I'm trying to make sure that I'm ahead of that curve and doing something that's uncomfortable, which my pillar of success is 100% not social media and this type of stuff, but I have to bring it in because if I don't, somebody else will.
Well, and I appreciate you saying that because this isn't my strength, but what I have learned is recognition, taking and helping bring recognition to those, because there's going to be somebody that sees this and goes, yeah, that's kind of how I think. That's the school of knowledge that I want to go down. That's the person I want to work with. And not everybody wants to do this. So it's like, cool, let me capture it and do it. I like doing that part of it. I have people help me with it. They're like, you capture it, Rich, send it to us. We'll make it look good. And I'm like, okay, cool. I don't have to do all the editing. All I got to do is record. And the more I do, I'm not going to say the better I get, more consistent I am. Trying to not make it last. No one wants to watch 5 hours of a conversation, but I always tell people on these are really specific. Because if somebody's like, how do I become successful in this industry? If one of the loan officers like, how does Shane do it? Right. And it's like, well, why don't you go watch that video? Because I have so many people say, I just don't even know what to do. I'm like, have you watched any of the videos? Because some of these people actually share what they do and they all do it differently, but they're successful. Maybe you should watch some of them, see if you can mimic any of them. Because if they're going to take the time to do it, why are you not taking the time to listen to it? And I started looking at it that way. But here's a backdoor thing that I learned. I've done coaching and stuff too. I've tried just about everything because every market's different and not everything works. And I've had to yell at me, accountability, Rich, go through that. You're just going to keep pounding that phone all day long. And I hated it, man. I've called leads. I'm like, okay, I hate calling cold leads. So I went and got telemarketers. They were my telemarketers, 2 sets of 10 all day long. We called homeowners. It was all about refis. They would get a warm lead and it was only one person to own that lead. It was me. So it was expensive, but yet I knew my numbers and X amount led to this many loans. And my database filled up. I had a database like 50,000 people before the 2008 crash when 90% of them lost their house, it seems like. But, I took the pain points and said, okay, I hate doing that. Coaches tell me, Rich, you got to call 25 people a day. 500 people a month. Therefore, I'll be lucky if I get 5 people to have coffee with me because they're all saying no. And I might get 1 referral partner out of that. And then I do that over and over and over. And I could build this referral database over the next year, 2 years. And I'm like, yeah, but I hate doing that. So I started doing it a different way. And Michael Radcliffe's like, that's funny because I was doing the same thing. But hey, I've got this channel over here called Mortgage Ballers. I'm not calling as Rich the loan officer. I got this channel. I'd love, man, you're doing great. And I'm not talking just realtors. I'm talking to anybody, attorneys, bankruptcy, to CPAs, painters, whatever. Anybody I could bring on, say, let me feature you, interview you. I'll promote it on YouTube. But now I get an hour conversation with this person. And it's not, hey, can I have coffee, man? After an hour, they sometimes know a little bit more about me. I know. And it's like, oh my God, turned out, my son plays in that same baseball program. He's 2 years older than your son. And especially if you're doing it within your area, you can find all these commonalities. And if I were to send out 500 calls, I can get like 100 people to say, hey, I'd like to do that. Versus before, I'm lucky if I can get 5. And all of a sudden, I don't have enough time. So I don't need to make that many calls, and I can get this kind of response. I'm always backdooring everything in my head because I am not a front door kind of person that's going to sit there and beat my head against the wall because I hate it. It's easier for me to find what I do like, and people like recognition, I find. But that's something that I've been using because just talking about this, it was not my comfort zone. I'm too fat. I'm too old. My teeth aren't straight, and I'm like, what? My very first interview, I'm not kidding. I had food on my face because I just ate a Chipotle burrito. Didn't know it. Went through the whole interview. And he said, oh my God, do you want to do it again? I said, no, because it was too good of an interview. There's no way we could replicate that interview twice. I'm going with it. If anything, I'm going to show people I'm human. But here's what I like about it. And this is the overall point. People relate to the imperfections more than they do the perfections because they can relate and say, it's not perfect, but I understand who he is now. That makes more sense to me. I have people that, man, they hire people, they have all the lighting and everything's perfect. They might as well be an avatar, right? Because they're not blinking. It's read from a script. And it's like, that works also. But my customers are blue collar workers. I don't get those high end stuff like where you're at. They're hardworking people because that's where I came from. That's who I relate to. That's what I grew up as. And they're so thankful and they have 20 friends just like them. And I've just always made my money helping those hardworking people. I'm not saying higher up people don't work hard, but there's a lot of competition going for those high end people. Because, hey, if I can do 3 couple $1 million loans versus 25 $250,000 loans, I'd rather do less and make more. I've just never been able to get in that market very well. I mean, you are in a tough market, very competitive. How do you do with your rates? Maybe why don't we go down that? How do you compete in your market?
Sure. That's a fantastic question, and a question that, like we were talking about, every real estate company, mortgage company always just wants their teeth and nails in the California market, especially Northern California market, because there's a lot of income for the job, so you can actually qualify people with a conventional or jumbo type loan, and the loan sizes are huge. I actually really got out, especially when I got here, I learned real quickly that service was, probably second or third in line for product and rates. I didn't really, go after rate shoppers. I didn't want to work with that specific client because, again, it doesn't matter how great a job you did. The excitement and the lust to tell all their friends was almost zero, even if you did get the deal. So there wasn't a lot of appreciation of that versus when I do the $500,000-$600,000 first time home buyers, you do get a lot of that appreciation and thankfulness and referrals. So I almost, not that I wanted to turn it away, but you kind of knew the client. If they were dual income Google employees that have been in the States for a few years and they could go anywhere and get specialized pricing, I would still talk to them because I always want to try to convert somebody and I want the opportunity to add them to my database and do a good job, thank them for making the time. And a lot of times I will win that deal just on service, white glove approach and what have you. But also I've partnered with a lot of banks that can't do all the stuff that we can. And if that's truly all they care about and they want that, I can hand them off to at least people in my network that do a very good job, that hate their jobs, but they have really low rates. And a lot of times it's reciprocated with the stuff that they can't do and the complex stuff. And sometimes it's so complicated that they end up back in my lap anyways because I didn't turn them away. So there's a lot of that. But like I was telling Rich, I really decided to do the backdoor thing, in your words, is to flip the script and not go just to the big bank so I can have that little rate with no control. I basically said, I'm the mortgage dump truck, for lack of better words. I want the stuff that's difficult. I want to earn that relationship with you. And oh, by the way, I do all the easy stuff very, very, very well and fast. And so at that point, the realtor, the referral partner is, especially if I help them save a deal, there isn't a plan B or C. It's Shane. Like you go to Shane or like, I'm not going to work with you if you're getting a mortgage loan. And so that's really the relationship that you want to build. But then you got to be really good at your stuff too. You got to make sure that time and time again that you can perform. And if we all, and it's only a matter of when we get hit with adversity, at least we've, made the decisions and done the file and did our due diligence to try to troubleshoot whatever we can. Because sometimes something just pops up that we can't get around, but then you got to actually explain exactly what happened in a clear, concise manner. So it does take a lot of work, but you do not have to be the lowest rating. I mean, that is absolutely the biggest myth on being successful in the mortgage business.
One thing I was running into California a lot of, especially Northern California where I was at, was, you have a lot of people that are very wealthy and they make money not normally, it's not a straight up W-2, they're entrepreneurs, they have companies and they're great at writing stuff off. They had ability to do a lot of things and you could see where they can make a lot of money. But they're just incredibly good on their taxes too, because part of it is how to legally not pay taxes. And so that's where the complexity started to come in. I started seeing that more and more and more, especially after COVID, because people were trying to reinvent themselves. Because once you find that you have the ability to make money, no matter what it is you do, the last thing you want to do is put a shackle on and go work for somebody as a W-2, because the freedom, I would not do well. I mean, that would be the kiss of death. You'd drain me. I'd rather, just break even every month, but have the freedom of being self-employed and the opportunity in case the market turns where I could double, triple my income, because my income goes like this, just like everybody else's. You were in the 2008 crash. Take me back there, because that wasn't a fun time. Not too many people I talked to went through that. So you did, though.
Yeah, absolutely. It just so happened, yeah. So I was, like anything else, when I got out of college, first job was in the mortgage business, and that was kind of right back when we were first having refi booms, and so we were doing what we knew best and buying deeds of trust with certain rates that we knew that we could lower and marketing to them with the name of the company. Everybody kind of probably seen that trick once or twice in their career. Made our phones ring, and 08, 09 hit, and there was no refis. And so it was really about actually trying to get ahead of the curve. And I was actually now transplanted from Texas to California, where I knew nobody. I didn't have a database of local agents or anything like that. I had my database in Texas, which wasn't worth much because everybody was underwater. But I decided that I was going to start over and really start marketing to realtors. And the realtors that I was going in were the transactional ones that were actually, doing basically, the foreclosure market. It's the short sales. And yes, they were doing a lot of those. Sometimes I could help, sometimes I wasn't, but at least they were transactional and a pretty good idea that they were going to stay in business, where a lot of my colleagues, a lot of realtors, all just, they basically packed their bags. And
Pack their bags. Yeah.
And so I really decided that, hey, look, I don't really care about refis. If I can refi somebody down the road, that's great, but I'm going to focus on the purchase business. I did a lot of meetings, a lot of networks. I was keeping, because everybody was leaving, I was like, well, if everybody's leaving, I'm going to stay. And so I was keeping them abreast on the changes, what banks were going away, what products were going away. No, money wasn't going to stop. We just had to have sources for it. So yeah, I had some thin years, but those years got better and better and better. And, like I said, it's, I've never left. This is all I know. So I'm not leaving. And so that's just, I think what happens is when you're thrown adversity, either you pivot and you go with change, or you swing and miss. And then, that's just, like I said, this industry is just like everything else. It's just always changing. There's always something to learn. You can't get complacent. You got to change this. You got to change that. And that's really, I think, what keeps most of us coming back. If I had to do the exact same task over and over again, that would not be good for me and my mental stability.
It's interesting you said something. If somebody had shared something with me, I never heard this story and I haven't checked the validity of it, but they were talking about buffalo versus other animals. And I'm like, what's this going? But saying that buffalo somewhere along the line learned to run into the storm because somehow they figured out that the shortest path to safety was running into the storm versus a lot of animals run away from the storm, prolonging how long they'll be subjected to it. And I was like, well, that's kind of interesting. I never heard that story. But, that's kind of, I hear that a lot through successful people. Like that's where the separation starts. Like some people are like, ooh, that's going to be painful. I'm going to start steering off to the direction. And then you got people say, you know what, to go 25 years in this industry or plus, you've had to go into some storms because you're learning as you're going. I'm not saying it's not going to be easy or hard and painful and frustrating. I've lost everything in 2008 and I had to reinvent myself because I was refi only up to December 2008 was the last day that I was a refi only. I know the date because I filed bankruptcy to save what little left I had. Reinvented myself, became a first-time home buyer, fixing credit, going for the bottom of the barrel because they would talk to me and I'd say, give me your hardest stuff. And I started slowly putting people on the houses. I got really good at California has a ton of programs, down payment assistance, stuff like that, CHFA, you name it, or Cali CHFA, I should say. But, I was like, okay, this makes more sense. I had friends that made it all the way through that crash. And they're like, Rich, everybody left and there was business, purchase business. And I'm like, I missed that. But I relearned. And that's kind of what became Answer Home Loans, which then became Xpert Home Lending, was making that change. And I started to run into these storms. I saw the storm coming after 21. And I said, you know what? I've already been through this once. And I told my wife, I think for us, if we're going to make it as a lender or a broker, I'm going to need a lot more states. And if we're going to do it, the correspondent side of this is going to help us because we'll be able to compete in different ways. But we're going to need those 3 hours. We're going to have to get to the East Coast somewhere. One little stop in Colorado was like 20 degrees, felt like 4. And I was like, that's not going to work for me. But that's how we ended up in Georgia. I was my whole life in California. But having to make those changes, there's what worked 20 years ago doesn't work. I can't use telemarketers anymore because you got to do not call. Like they keep making it harder and harder and harder, and you got to keep reinventing yourself. So people say, oh God, 20 years. I was really good 20 years ago. I'm like, cool, but man, you haven't done a loan in the last 14 months. Like, are you able to adapt? Because the best of the best adapt. We have no choice. We're not going to fail. I'm just going to have to figure out how to do it. And guess what? I might have to get on this stupid thing, or I might. Now, I'm not dancing on top of a table anywhere, recording that, saying, hey, by the way, I do loans. People are good at that. I'm not good at that. My wife would kill me if I did that, by the way. But here's the fact. It's funny because you said you're in Santa Cruz right now? So I used to go down there yearly, whether it was, I say Monterey, but it's not, Pacific Grove or right there in Santa Cruz for the big kahuna. And I would do the half Ironmans down there. And part of that event, that's one of the scarier events for me because you have to swim 100 yards off the pier at Santa Cruz and you're looking down, there's tons of sea lions. And that's why they don't want you next to the pier. But the problem is if there's sea lions, you get out to the end of that thing and you're making that big turn, that water's dark and deep. And I'm like, I know there's other stuff out there too. And I'm just like, how far are you away from, what's it called? The big waves that come in once a year, Mavericks. How far are you away from that?
Yeah, it's going to be a Half Moon Bay.
Half Moon Bay.
We're like, Santa Cruz is not, I call it 30 minutes, 30 miles. It's just straight up Highway 1 from Mavericks. Yeah, that's above my pay grade.
Do you get in the water? Are you a surfer? I mean,
yeah, you kind of, I mean, growing up in Texas, I mean,
yeah.
The rivers and streams is pretty much all we had. But you come out here and just kind of ride a passage. You got to get your boards. And I get out there sometimes. It's the Pacific Ocean. If anybody's never been in it, it's very cold. And where I live now, it's very sharky. Which
yes.
is always the most fun. But
sharks as in sharks, people. That's what he's saying.
Absolutely. And where I surf, there's nobody out there except you. Is stupid enough to go with you. It's a lot of fun. They said it's really nice to have a little beach town outside of Silicon Valley where, all the great wines and all the earners are there. We have this little bit of beach town right outside of, basically a mountain that you drive over. And it's not like Southern California where they're all over the place. Ours is pretty special. So, like anything else. It got beat up by COVID with prices, and the bro mentality is definitely had to move out because it's not affordable at all anymore. But it's still a nice place to call.
No, it's wonderful. People ask me what I miss about California, and it's Santa Cruz, it's Capitola, it's Pismo Beach, it's Monterey. You know, the ocean, if we're getting at it. My wife's always said, what's your ultimate retirement? And I'm like, well, the ocean all day long. It's different, but the sound of it. I grew up in Southern California, just outside Huntington Beach. From San Bernardino, 45 minutes, we could be down there, and just have always loved the beach. I'm not near a beach. We got a lot of lakes now, but ultimately one day, if I do retire or find a way to do it, I got to get to the coast. That's the happiest I am. There's no bad days on the coast because I'm just not I've been talking to people from Colorado. They're like, well, we're all skiing right now. And I'm like, yeah, I've never really been a skier. I'd rather be out in the ocean. So that's awesome that you do that. And that might have touched on my question for this next one, because I know that you do loans. I know you broke off to try and help with some Keller Williams stuff because you got people on that side. But when you're not doing loans, when you're not trying to figure out that next level and reinventing yourself and getting, people into homes and taking those hard deals and being the dump truck, trying to get more, because those aren't easy loans, especially the bigger they are. What kind of hobbies do you have? What's your time off look like? How do you unplug?
Yeah, great question. My wife would say never,
Mine
but
too.
that's not the case. It's funny because I thought I could write a book on mortgage and sales and how to deal with stress and everything. And I was like, two things: exercise and alcohol. And I learned over time that alcohol isn't necessarily the best release for stress in regards to mortgage or sales. So yeah, I
Yeah,
don't even
definitely.
drink anymore. So definitely have to fill that time with positive things. I do a ton of exercise. I play a lot of golf, a lot of family stuff. I got a 9-year-old little girl. The guitar, I keep it one in every office just because it's really hard to play the guitar and hold your phone at the same time. Little ways to unplug, stuff like that. But yeah, I stay super busy, read a lot. If I don't, then I just become complacent, and then my body starts breaking down. So I don't think I'll ever be able to spell the word retirement in any way, shape, or form. I love the mortgage business because I do a lot of other things too. And north, people are like, how do you live there with the tax and politics and cost of living? I'm like, we call it's two words: side hustle or side hustles. And
Okay.
so real estate, kind of like yourself, has led me down many paths of investing, flipping, Airbnbs, different businesses that I thought could somewhat be real estate related in regards to different things, gyms, anything that I was interested in. It's kind of helped. So I love the mortgage business. It will always be my 9 to 5, and I'll never look back on it. But I do like to spend my time doing other things as well. And again, that's just expanding your network too. And no longer are you looked at as, you're just the mortgage guy asking for business. I'm like, well, no, I'm actually could be your client. And actually, that leads to one thing that I was doing, even in like the 2015 and beyond. We had a home flipping company where all we did was have people set up meetings as investors and basically would go into markets and talk about not real estate agents never showing up, even when we're the investor wanting to take coffee and use them to find you deals. They would still stand you up like at least 30-40% of the time. So it's not just mortgage guys, but it was nice because that was part of the deal. We would say, Shane, blah, 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 I got $20 million. I'm going to place in the San Diego market. Love to take you to coffee, see if you can help me with X, Y, and Z. We obviously talk about my interest as an investor. And then I would always be like, well, by the way, I also do loans. And so it was a really nice segue into trying to grow those opportunities as well. So again, just finding, markets inside the markets. It's always been kind of cool. But just to answer your question, yeah, I'd love to put time and effort into the investment side of things and growing other businesses too.
And it would I would struggle if all I did was be a loan officer. I've used my real estate license, just like what you're talking about, to flip homes. I got to where like, oh, I don't want to swing a hammer no more. And people say, oh, I want to flip. I'm like, cool, I'll front the money and you'll have it back in 90 to 120 days. And we think it'll be this much. Cool. I'll give you a guarantee of this much. Yeah. Go make all the rest of the profit. And there's certain people that got really good at it, right? And you're like, cool, let me know if you got another one. Let me know if you got another one. Like that's, I can keep the money over here in the bank, or I can have it over here with you, and I'm not swinging hammers. I got a few cuts on my hands from trying to do that myself. But at the same point, I didn't have to own all these properties and go get the loans. And I was like, okay, there's a bridge in there for some of these people. And there's some people who are really good at it, some people are really bad at it. And it's like, ooh, I can see why the lenders ask a few extra questions before they just give you. And they're like 70% of the aftermarket. Yeah, because if you screw it up, they want to know they can get their money out, you know?
Where's your resume and financials?
Yes, definitely. And that's, in some of those homes, it'd be like, hey, instead of paying me, put that towards a down payment. I'm going to actually keep that one as a rental. Like that one turned out really good. I like that one because I was amazed at some of the deals they could find. I'm like, where do you guys find these deals? Like I can't find them. George is the same way. It's like Chris Cook. He took off and went from California to Texas, and he was one of the people I was back. He did one flip, but I was amazed. Like you can buy properties for $45,000 in Texas, but you're going to be doing a lot of renovation to them. California, you could just do a few basic things. You didn't typically have to take it all the way down to the studs but Texas, some of these homes have been sitting a while and they've been getting weathered and stormed. So he had to learn like, wow, I'm going to have to be even better at this. These aren't just, 90-day flips. This is going to take 6 to 7 months because I got to get my network of people. But, I just enjoy, like if you have a license, you should be using it to the fullest. One of the best, I am one of my best, customers, doing my own loans, doing my own flips, trying to add real estate, 1031 exchanges, doing whatever. You guys are also my side hustle. There's over 600 of you, and I don't know who will be here tomorrow, who will be here 20 years from now. It's like, so I try and consistently make sure that I'm also taking this one serious as well. And that's kind of what led me to want to, interact with you. Because we talked about it. 600 plus people, 299 are averaging one loan a year. That 85% of the business is done by the top 20%, the next 10% right in the middle. And those remaining people are fighting for 5% of the business out there. It's just interesting. Our whole industry, whether it's the realtors, 28% of licensees did a transaction last year. COVID, we had 400 plus thousand licensees. Now we're down to under 100,000. You talk about surviving yet again. You went through 2008, you went through that. Now you went through this one. Which one was worse for you? That one or this one?
Oh wait, 09, 100%. I mean, I was super lucky that we shut our doors as a little brokerage. We didn't have any debt. We didn't have to file for bankruptcy. It was just one of those things where HUD wanted you to have X amount of resources to get your FA. I mean, it was just a different world. Plus, I was in my 20s. I kept my house. I didn't have the wherewithal to put money away. Still had great years. COVID were fantastic years, and I just. You're just smarter than this guy. I've seen this. I know it. Yes, we've prayed for these 2 years, but no jets, no yachts. I mean, I could tell you the stories, you probably know them too, the people that got way over leveraged. I just didn't want to see that happening. And quite honestly, yes. I mean, if you were doing well in COVID and in 2 years after, if you weren't under 50%, or more of your production, you probably don't know your numbers or you're lying. It's just there wasn't that much business unless you sold out and went to a bank for a little bitty margin. It's just the numbers are just what it is. Even the top producers you just look at the scales, they've just shrunk down.
Shrunk down, way down.
So you just gotta, look at your numbers, cut margin. Like I used to have a task force of people to help me. Business development callers, LP1, we were coached by the core, LP1, LP2. Juniors, all taking a slice of the pie. We were like, why do we need all this? Loan officers should be calling their leads. If you're doing, 10 to 20 deals a month, yeah, you could probably hire an assistant to help. But you just have to watch your numbers, and it's not getting any cheaper to run this business. I mean, thanks to credit reports. And it's not getting any easier. You just got to get a little bit better. And the nice thing is, yes, we get a little tick up on loan size every year, but it's an expensive business, and so you got to run it smarter. I don't purchase any leads. I really don't do a lot of co-marketing spends at all anymore. anymore. I used to be inside of a bunch of different real estate offices. We weren't monetizing, and especially when the numbers went down. It just wasn't pay per deal. It was like, you want to rent a desk or you want to do this MSA. I mean, the numbers just don't really shake out in that regard.
Yeah, I agree.
So you just, gotta be better. And people always come to me and they're like, hey, like my son wants to, get into sales and do this, that, and the other. And I was like, yeah, tell him go get his real estate license and his loan officer's license. I was like, we can help him, grow the business, but he's gonna need 2 years of pain and suffering. And we can help with that, but there's not going to be nights out at the club and highfalutin cars and stuff like that. They have to be ready to be like, very, 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 I guess, understanding of what the first, not that everybody's trajectory is in there. I've seen
right. You got to be patient.
I've seen it, but it's very rare. So, I just think you have to be understanding, predictable, look at your numbers, look at the market, see what your overhead is, and can you, have a lifestyle accordingly. And so, I'm not losing my house, knock on wood. And so, it's one of those things that, like I said, I think you just have to understand that if you get complacent in this business, the business is going to take off without you, and you're going to be left behind.
Yeah, so
that's why this stupid thing is in front of my face.
It's really hard because it keeps changing. And if you take some time off, even as a realtor, it's like you get out of swing really quick because the lending atmosphere changes. And it's like, oh, I was out for 2 years. I'm like, cool. Things have changed a lot since 2 years, right? What you could do 2 years ago, we can't do. Do you know what TRID is? Do you understand TRID? I think the average loan officer is 46, 47. I get it. Who'd want to come into this, right? My sons came in. I'm like, hey, I've used my licenses for everything. So they do a lot of VA transactions. They also do some real estate. Both of them have owned 3 houses and they're not even 30 yet. And that's not anything I'm doing. I mean, they're doing that on their own going, hey, can I do this? Can I do that? Like, yeah, you can. I'm like, they just keep going and doing it. And sometimes like, hey, slow down a little bit. It's going to be an interesting market. They didn't go through 2008, but I'm like, you guys can remember that though, right? You remember we lost that house, right? You remember we lost those 3 rentals. You remember I went to work for USAA Insurance. Like, do you guys remember that hardship at all? Thank God they have short memories. Kids have short memories because my wife and I don't have short memories, and we made a lot of changes, how we live our life, debt, stuff like that. You know what? I know I'm taking a lot of your time, Shane. I want to ask you one more question.
Go for
it. If you could go back in time and give yourself, your younger self, some advice based on what you've accumulated all these years, what advice would you give to yourself knowing what you know now?
Oh, gosh. Can't really say be more of a risk taker because I am like super risk adverse. My father is not. I would say just don't sweat the small stuff. I think like loan officers and realtors, like if you're having a bad day or bad month, like it's just depression 101 down, like whether I'm picking up a substance or I'm overeating or doing things. It's like you throw all that stuff into your job and it's just diminishing returns. So I think it would just be like, look, tomorrow's another day. You give yourself the boohoo moments and the hours and what have you, and lose a big deal or lose an account, but it's not the end of the world. And just pick yourself right back up, have a good attitude, and get on with it.
No, that's great. I mean, consistency, no matter what my days are like, I do the same things over and over and over because I know what my success formula is. So might not be everybody else's, but I know the things that I can do that will turn into business. Sometimes I go 3 months without business and then all of a sudden I get 5 deals. And then I know what my averages are. It is a tougher market, but there's still business out there. Don't limit yourself to refis because there's not a lot of those right now. You better learn how to do purchases. We'll take the refis when they come. Sure, who wouldn't? But we're watching the Feds are meeting today. We're wondering where they're going to go. The words they say mean more than maybe the actions, because we're trying to understand. Because we had our last rate drop last September, so we haven't really seen anything. They didn't raise them, but obviously they haven't been lowering them. The market can play into that too. But we'll cross our hands on where this is going.
Yeah, I'm about to go give an update like you
Yeah, that's
talked
right.
about. Yeah,
I
yeah.
don't
Not only am
envy
I a
you.
loan officer, I'm a loan officer, I'm a therapist, and I'm an economist, all part time. So
I like it. I like
I
it.
just, yeah, pray for me because again, whatever I say for the next 30 minutes is going to change as soon as the Fed comes out about 30 minutes later. So,
Well, I wish you luck with that. More people
thank you.
should do that. But Shane, I want to say thank you for your partnership. I want to say thank you for. I know you can go anywhere you want. I mean, you probably get recruiting calls all day. Whether I get you for one day more, if I get you for 20 years more, it's a partnership. People don't work for me. I have to bring something to the table. You bring something, and either we're both successful or we're both not. That's really where it goes. But thank you for
Yeah, appreciate you
partner
taking
with
the time
expert,
as
man.
well. And thanks for digging in and doing stuff that you didn't have to, help not only myself and mid-level top producers, but anybody that's just trying to, get their next deal in. So I appreciate you doing that from an ownership standpoint.
You guys always have incredible knowledge, especially the guys and gals that have been doing it for a long time, man. They've seen a lot, the ups and downs, and it's a different conversation than somebody who's only been doing it for a few years. Somebody that came in during 20 and 21, they probably are in shock going, what in the world happened? This too shall turn. They always do. There's always that next level, but you're at least set up in the right place for whatever that next level is. We're all ready, right? We're all waiting for some changes. But Shane, thank you so much for your time today. I wish you nothing but success for 2025. But like I always tell people when we have a great interview, stay thirsty, my friends. Hey, good luck today. All right, take care.